Hello everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. This week, the spot price of steel has declined. Domestically, the spot price of hot-rolled coils dropped by 30 yuan per ton, and the price of rebar also fell by 30 yuan per ton this week. On the macro front, as Federal Reserve Chair Jerome Powell shifted to a dovish stance, the probability of a Fed rate cut in September has risen to 96%, with the probability of another cut in October also increasing. Currently, since the pricing based on rate cut expectations is already relatively clear, caution is needed regarding potential expectation gaps in September caused by worse than expected inflation. Domestically, the sentiment against involution has cooled down, and expectations of production restrictions related to the military parade have further weakened. Prices of commodity varieties that previously rose due to production restriction expectations have started to decline. Except for the frequent occurrence of accidents in coking coal mines, the sentiment around steel production restrictions in the Beijing-Tianjin-Hebei surrounding area has almost dissipated. On the industrial side, the weekly output of the 5 major steel products continued to increase, rising by 65,500 tons week on week, while molten iron output remained at a high level. Among them, HRC output increased by 27,300 tons, and rebar output rose by 59,100 tons, with the output growth mainly driven by the resumption of production at electric arc furnaces. On the demand side, affected by falling temperatures and reduced rainfall, the weekly apparent demand rebounded slightly. Overall, demand performed not bad for the off-season, with an average weekly increase of 47,800 tons. In terms of inventory, the pace of inventory accumulation for the 5 major steel products persisted this week, with a total inventory increase of 268,400 tons. The inventory buildup was mainly concentrated in social inventories, while factory inventories still showed a downward trend. Currently, there is no accumulation of pressure on factory inventories, and absolute inventory levels remain relatively low. In summary, the sentiment against involution has gradually cooled, and steel has operated relatively steadily during the off-season. From a fundamental perspective, there is no significant contradiction between supply and demand of steel, and raw materials are supported by high molten iron output. In terms of profitability, steel mills still maintain relatively good profit margins. And no significant pressure for production cuts has been observed so far. As the military parade approaches, the intensity of speculative activities related to it has weakened. Therefore, under the current supply and demand conditions, there is no significant accumulation of contradictions, and from the perspective of social and factory inventories, there is no expectation of negative feedback transactions for the time being. Looking ahead, the room for steel price increases during the off-season has not yet opened up, but there is cost support at the bottom. Before steel demand becomes clear, prices are expected to mainly trade in a fluctuating range. For procurement, after the spot price declines, consideration can be given to increasing part of the procurement volume. On the institutional side, the supply-demand pattern has somewhat deteriorated during the off-season, with inventory accumulation of rebar and hot-rolled coils increasing. However, raw material prices are supported by the high output of molten iron. Macroeconomic policies provide certain sentiment-driven support, and coupled with the possibility of an interest rate cut in September, there is temporarily no basis for negative feedback. As a result, steel prices currently find support at lower levels. To sum up, after the recent decline in steel prices, there is support at the bottom, and prices tend to fluctuate. In terms of product categories, long steel products, steel billets, etc. are recommended. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week!